Welcome to Conversations. Today's conversation is with Nick Dean. Nick is a certified financial advisor and financial coach at his own organization, the Financial Coaching Center. So thanks to Neola for putting me on to Nick. Neola helps us with our mental health, always gives us some good takeaways. And Nick is much the same in the area of financial advice. And I don't know if you're anything like me, but your mental health don't be too good when your finances ain't too good now. So it's really me on a journey to try to provide some information and look for some information for myself, really, to try to navigate these mean financial streets. So let's see if we get Nick on the line.
Hey, Corey, how's it going?
Hi, good. You hear me clearly?
Yeah, I can.
All right, good. Season's greetings. Happy almost New Year.
Yeah, same to you, man.
By the time we release this, it should be Happy New Year.
Well, that's okay.
How was the season?
Pretty good actually. Visited some family, so that's always good.
You're keeping family under 10 and thing, or you're having little Zessen and Western parties?
What's that, sorry?
I say you're keeping the family gatherings under 10, or you're having Zessen and Western parties over the Christmas?
No, it's definitely under 10.
Different kind of Christmas, right?
Oh yeah, definitely it is, boy. Strange, but still enjoyable. We made the most of it.
Well, the encouraging thing is that we come to a close of 2020, which at one point it was looking like, I know, it was looking like we wouldn't have make it. No? March had seemed so far away from the end of the year. I didn't think we'd be at the end of the year still with protocols and all these things. I thought this was a month and a half thing at most, but we made it.
I actually have revised my outlook, and I am saying, as it comes, we deal with it.
I suppose, because now it's a whole new, as they say, vaccine is our next strain, and boy, I don't know what 2021 will look like.
Well, as they call it, they say that it's a new norm, so we have to, just arrange new behaviors and still get the business of life going whilst we adjust to those changes.
Right. Well, that's why I feel like talking to you would be a good place to start the year. Like I was telling listeners in the last couple episodes that I kind of like New Year's resolutions and the feel of a new start that a new year gives you. I think our office closes off for 2 weeks at the end of the year. So it's some time to reflect on everything, and I usually have some resolutions, but like you say, it's so tricky to plan things in advance in a year, like coming off a year like 2020. Trying to plan out too far ahead in 2021 is, you don't know where to start.
Yeah.
And on my list for planning is always financial planning.
Well, that makes plenty sense.
But it's go out the door in about 2 or 3 days. So that's why I say, let me get your help and get some advice from you. My financial planning lasts about 48 hours.
Sure, no problem. My pleasure, man.
All right, good. So maybe a good place to start would be, I remember when I spoke to you the first time, you sound like one of the most experienced people in the financial world I've heard for a long time. Like you've been all across the financial landscape, right?
Pretty much. Well, the two primary ones would be in banking and the insurance industry, which I left about 17 years ago.
Right.
Those industries, that almost 2 decades ago. Yeah.
And fully on your own now at Financial Coaching Center is your company?
Yeah. So 17 years we've been operating, and we are independent financial advisors and trainers. So we're not connected to any financial institution, but we do have knowledge because our background is, working in the financial services sector.
Right.
And I say we because it's myself and a junior partner, Joshua Desant, and we've been working together for the past 2 years.
Mm-hmm.
So it's really great to have, an extra brain to push things forward.
Of course. How you got into finance as a career in the first place?
Oh, that's amazing. I actually never had any kind of guidance with money. And obviously, when you don't have guidance, you tend to make a lot of mistakes.
Right.
And, it's interestingly enough that when I worked in the financial sector, you might be surprised to hear this, but I learned about the systems, but I didn't really understand the fundamentals of wealth and money because they don't really teach you that when you work in those, in those industries. So I would say the genesis of the whole thing came from when I reached rock bottom financially.
Mm-hmm.
and meaning that I had what was called a negative net worth and a negative cash flow,
Right.
which means I spent more money than I was making, and I was owing more money than I had stuff to my name in terms of assets.
Mm.
And sometimes that's a good place to start, because when you can't go lower anymore, the only
Yes.
place to go is up.
There's only progress from there.
Well, correct. So, but money was always very elusive. It was always a very elusive topic, because I did not grow up in wealth. I did not, I was not from a family of privilege and stuff like that.
Right.
And when I realized, okay, well, there's a saying, if it has to be, it's up to me. I would say me and God, because that he definitely helped me in this journey.
Right.
I started to read a lot of books, and I read every bit of material that I could have got my hands on the subject matter. Eventually, I stumbled over a course that you could have done to educate yourself on financial planning. So I did a couple of courses on that, one Canadian and one local. And what happened was I worked in the banking sector for 10 years, and then I moved to the insurance industry.
Right.
And after I spent 3 years in the insurance industry, I look back and I said to myself, I want to work for myself, and I have this knowledge now that I can apply. And I've been practicing what I was preaching. And I realized that I may not be the only person with this problem. And I started to do a little survey to find out, who else has this problem, and, to what extent, the problem is. And eventually I realized, well, this thing is huge. The potential of this thing is huge. And I made the jump in 2003, I think it was. And I stepped out being an independent financial advisor. Okay. Of course, I still had no money at that time, but I had all the knowledge. I had the knowledge now. And it was a slow crawl in the earlies. And now I would say, almost 2 decades later, it was probably one of the best decisions I ever made in my entire life, and I kind of stumbled over it. So that's the entire journey in a nutshell.
But when you said you hit financial rock bottom, you were already working in the institutions at the time?
Yeah. Actually, I worked when I was in. Okay, so my career spans 30 years. So right, so I'm 51 now. When I was like 20, 21, I started working in the banking sector. And again, I didn't know much about money. So my introduction to money came from the banking sector. But unfortunately, the departments that I worked in was loans and debt recovery. And they didn't really teach you much about how do you build wealth. They taught you very well how to get into debt. And then if you didn't pay your debt, what will happen?
That's surprising, because from the other side of the counter, it's easy to assume that people who in the finance world, whether it be banking, insurance, it's easy to assume that they have it together, personally.
Boy, let me tell you something. I'm sorry to say this. I have respect for a lot of bankers, but many bankers that I know, they are actually living paycheck to paycheck.
Right.
Believe it or not. And people in this insurance sector, people in the investment world, the story is the same. Because they sell products that make money for the company that they're working for.
I suppose.
And what you're really observing is a transfer of wealth, not really a building of wealth. The wealth is transferred from one group of people to the other.
Right.
And that's how the system works. So you would not really understand the secrets of wealth, because you're actually taking wealth from the rest of the world for the organization that you're working for, not necessarily for yourself. So you didn't benefit from it, really.
Well, that could be even more frustrating, because I like to bad talk the banks, because as far as I'm a marketing guy, right? So I'm always very wary of how debt is marketed, because I could see where look at Christmas as an example. In the average Christmas, taking this last Christmas aside, and it's probably done this Christmas too. The idea is to take a small loan. Every financial institution, from the credit union to the banks, they tell you, take a small loan, cover your Christmas expenses, this, that, and the other, pay it off in a short space of time. Do the higher purchase thing. So you could see where it's really trying to get, I like how you put it, it's really a transfer of wealth, part of your money, get some things or some service, travel, whatever it is. And it feels like it only happened to the customer, but it's interesting to hear that. And I could see what you're saying, because if you in the institution itself, why not target you first?
Well, the truth of it is, if we are representatives of the institution, and we have to get people to be convinced about the narrative,
Oh yeah, you have to
then
buy in.
we have to buy in first,
Gotcha.
and then we can't sell what we don't use. So obviously that's how it happened.
Interesting.
It's unfortunate. The world is changing, though. The landscape of financial education is changing.
Mm-hmm.
People are becoming more educated about money. The education, I would say, accounts for part of your success, but a lot of it depends on your behavior and how you use that information. So information has now become more popular, especially because of with the advent of technology and social media.
Right.
More financial information is out there now, and people now have to take that information and apply it directly in an everyday situation, which it still hasn't happened as yet, because we still have this big, a huge gap between those who have and those who don't have, and those who are wealthy and those who are not.
Mm-hmm.
I think that is really where, the application, I think the problem there is the application part now.
I agree. Like when I see your bio and it talks about financial coaching, I find that to be interesting. Like that is something that draws me in, because I, like you, hit. Well, I different from you. I feel like I hit and I stay at financial, or you call financial rock bottom, because I owe more than I have at this point.
Right.
And you would, like, reading is always a way to try to figure it out as you go along, because similar to what you're saying with the banks, the university education, when we learn business and you learn finance, it really teaches you a lot about managing the finances of a business, or the finances of a business, not yours.
Correct. Yeah.
And more so the finances of a very big business or corporation, and not a small enterprise either. You don't learn much about that in UE, for sure. They wasn't teaching much of that.
Correct.
So, like, one of the books I had read that stayed with me over the years was Rich Dad, Poor Dad.
Yeah.
Because it was simple.
Right.
It was like, find ways to make money to cover the things that you want to buy, rather than the idea of getting into more debt or spending all your money. It puts you paycheck to paycheck if you continue to do that.
Right.
But what you say is so true, is like the application has always been, like, I could see the logic in a lot of the books that I've read.
Yeah.
But it's like a huge gap between how do I apply it. It's like, okay, how you say, so just make more money, and when you need to buy things, like, make the more money, how? Or, it's such a hard thing to figure out when you read books like those. So is that what your coaching helps people to get from there to there?
Well, actually, before coaching became very popular in the world, I had no choice but to adopt a coaching approach to my practice, because, and the reason being, being a certified financial advisor, you come fresh out of school, you have all these wonderful financial models that you can build for clients. They pay for it, and then a year later, they're actually in a worse off situation. And I couldn't understand, and I got really frustrated, and it actually caused me to even want to give up the business, because I didn't think I was making a difference. And then I started, I said, okay, what's going on here? What is the real root cause of the problem for people not achieving more out of their financial, plans? And again, this is where the whole behavioral element of it came in. And I realized that, number one, as long as marketing is very scientific and very powerful, and when I say marketing, I'm talking about marketing of goods and services on the internet, off the internet, wherever.
Right.
Once they are doing a fantastic job, consumer behavior scientists are doing a fantastic job, people are not going to have money, because there's this allure, of wanting these things, and obviously you can't have your money and these things at the same time. So you have to exchange your money for these things, and then you realize after a while, I don't need these things, and 10, 15 years later, you have a lot of stuff and you have no money. So I had to get into the psychology of spending first, and then get into the psychology of money. So I had to study a lot of material a lot of observations. I did investigations with clients to ask them, what's going on? Tell me what are the challenges that you're having? And then I realized, okay, this thing is really serious because this thing really accounts for the majority of a person's success or failure. And I realized that we have to spend more time talking about people's family history, their childhood socialization, a lot of the things that don't even have any bearing on money directly. But if we don't address them, then we're definitely going to have a challenge getting clients to or getting individuals to apply the plans that you give them because they're not going to do it.
Yeah, I suppose it speaks to your attitude towards money on the whole.
Yeah, and this is where a coach comes in. A coach is not how should I say? It's not a coach is not a judgmental person. Sometimes you have to do the tough love bit,
right.
But a coach really has to encourage you and egg you forward to want this goal that you set for yourself, and then keep on you from time to time to make sure that you're doing what you need to do, and then give you enough space to make your mistakes, and then keep the door open so that you could come back, and then let's talk about what happened, and then let's try and see if we could improve the last version of yourself. So this is where the whole coaching thing came from.
Yeah, it's starting to be more of a feel now, like you're hearing coaches in any discipline now. But I guess you're right. If you started off, how much years ago? 17 years ago?
Yeah, 17 years
ago.
Yeah,
that was 2003. People didn't want to hear. The idea of coaching is only in sports sometimes.
That's right, exactly. Yeah, but as it caught on because people realized, okay, I can't do it myself.
Yeah.
Even in especially in the short term, maybe in the longer term, I can take over the mantle on my own. But generally, a lot of times people need hand-holding. They need some kind of support, moral support. They need guidance to give them a different perspective on the situation. You have a perspective of one, which is usually the incorrect perspective.
Yeah, it's limited at best, and a lot of times what happens is that we don't have the tools. So even though you're trying to do it, like for me personally, you're trying to do it yourself. It's an issue. It's not when you look yourself in the mirror, you're having an issue. You're heading down a road. But figuring out how to get from that point A to point B. It's just like any sport, I suppose. It's really a coach that could help you with simple things, or somebody who on the outside looking in to kind of show you what you might be doing that might be hurting more than helping.
Correct. And you can't do it in a judgmental way because people are going to be repulsed by that. So you have to become a very good salesperson, I guess.
Right.
To sell your ideas in a way that people don't feel that they're being sold, but they have to buy into it. So there's a lot of psychology, to get people to achieve, some kind of success.
Yeah, and I think one of the things you said, Zula, is important. And I feel we can help this. So I appreciate you doing this because a part of what we need to do collectively is talk about it more. Because it could be embarrassing. It could be something that is hard to go and tell somebody, hey, listen, I'm in some financial trouble. I need to find my way out of this. I need help with this. So I guess the conversation is a good place to start.
Actually, and as you said that there, I remember when I now started my practice, and people used to complain to their friends who come and see me. So the clients that came to see me, when they go back and they tell their friends, or their associates, whoever, people in their circle, I've been talking to a financial guy, and they get this pushback. You actually paying a guy to tell you how to spend your money, and they got laughed at in the early days. And that was it was a huge obstacle in the beginning.
I could imagine.
So yeah, that's it's really interesting how things have changed.
Yeah. I think people much more open to it now, and I guess like as in every other area in life, if you don't ask for the help, sometimes you find yourself spinning in some circles. Like one of the things that I like, no, beyond books, you could Google anything.
Yes.
So it might feel as though just Google it and figure out some ways to get past it. So one of the ways I have found, like a tool I found online that was pretty useful, was this 60-40 personal budget rule. You ever heard about it?
I've heard different percentages, and that could be one of them. Tell me what it is.
So what they said was to figure out how to get all your essential living expenses has 60% of your gross income.
Right.
And then the next 40% is split up in 4 ways. 10% on retirement savings, 10% on long-term savings, 10% on short-term, and then 10% on what they said is like fun and entertainment. So what we do, kind of like every month, you go out when you could have go out, and yes, you spend it on that kind of thing. So the first time I see that, my living expenses on a monthly was something like 85, 90, but I don't even have 40 to split up. So it's like you're back to square one. You have to try to figure out now, how do you make those adjustments?
Yeah.
And like when you say financial advisor, I've met with so many financial advisors over the years who've turned out to be insurance agents that sell your annuity.
Yeah.
You know what I mean?
Yeah, I mean that has happened. But that is changing too, because they're going back to calling themselves insurance agents or insurance professionals, because misrepresenting yourself as a financial advisor, when at the end of the day you ask the question, well, how do you get paid? I only get paid if I sell you a product. What if I don't need a product? I still have to sell you something.
Yeah, I find it's bad. I remember as a young fellow, I was working TSTT. This is one of my first jobs. And we this cycle of back pay that you get. And the company had organized, well, what I thought was the company had organized a financial advisor, because them days they come into at my age, a windfall. I must get about $10,000. I don't know where to start. And so I say, well, good, they have a financial advisor. And I was trying to find out about, like, what do you do? Is it the stock exchange? I thought it was like options. But it was really just somebody from a company directly who come in to sell policies.
Oh my gosh.
And must he still have the policy up to today?
Oh my gosh, seriously. Okay.
Yeah, because you see, the thing is, when you say, when you say financial advisor, the impression is that you're going to do what's in my best interest.
Right.
And I think it's better if you go back to calling it insurance agent, whatever it should be called, but there should be something that allows the customer, because a lot of times as customers or the average person and the layman, we in the dark already.
Right.
So to have a name that is sort of like a guidepost, when you're really not no guidepost, you're trying to send me in one direction, it's kind of unfortunate,
Yeah, well, I mean, you can't fault them to some extent. I mean, how else are they getting paid?
It's marketing, of course.
Yeah. And now people are a little more sophisticated now. People reach out to me on the same Google thing, they go out to Google and they find, well, we kind of show up pretty high on the search ranking in terms of Google searches. Mm-hmm. And the people who come from the Google searches and they approach us, they often ask that question right away. Are you an insurance agent or are you an independent? So you can see the thing has changed, the trend, the whole thing has changed. People are now more conscious of it.
That's real good. I mean, the more consciousness we get, I think is better. Everybody, we at least en route to a solution, I think.
Yeah.
So that's good. Now, you mentioned debt collecting.
Right.
So if I could talk about that for a second, because I also worked in a department that did debt collection for TSTT as well.
Right.
It's a rough place to work, boy.
Right.
Because it's really seeing people at some of the lowest times of their lives.
Yeah.
And unfortunately, this was one of those years too where a lot could have been in jeopardy, because the business is not what it was. I mean, think of bars being closed for what would be 3/4 of the year, really.
Correct.
When you add it up, restaurants under capacity, everything is a rough place. So you're seeing businesses going out, shutting down, people losing their jobs and so on. And I feel like if that is also one of those areas, if you want to say financial rock bottom, is a hard place to be.
Yeah.
But I also feel like it's a real opportunity even to hear voices like yours or advice that you have to give, because sometimes when you're in situations like those, the restructuring that a coach might help you with, somebody going to do it for you. The bank going to tell you, hey, here we're going on. This had to be paid regardless. These assets had to be given away, sold, whatever it might be,
Yes.
So I think it's a real opportunity at this point to hear from or get in touch with or get advice from somebody like you who. And what I like about your experience as well is that you walk the journey.
Definitely.
You know what I mean? So it helps a lot. So
I sold the drug and I took the drug.
Nice. You get high on your own supply.
Let me say what I would say. on the point of debt, when I was a debt collector, I mean, a majority of my banking life was spent as a debt collector. In the later half, I was, fast for 3 to 4 years, I became a loans officer more directly. But in any event, I still had that, still had that hat on. We always had to do debt collections because you give the loan, you have to collect on it, right? One of the things that stood out to me in the years that I did that collection from interviewing a lot of customers, clients, I realized that people aren't generally bad people. Most people whose loans are delinquent, not they delinquent, the loans,
Okay.
delinquents, they really didn't know how to operate. They did not have the knowledge. They did not know how to. This credit card that you gave me, most people thought when I give back the card itself to the bank after I've maxed it out, I no longer have a debt. They didn't even understand the concept of debt. And to some extent, the financial institutions need to do more, I believe, to educate people. Okay, this is exactly what you're getting into. But what I noticed is that you had the opportunity to read all the documents that they give you, like 10, 15 documents to sign, when you get a loan. But nobody's reading that.
No.
And
It's hard to
nobody's going to
read.
give you a summary of it.
Mm-hmm.
And, you have to do your due diligence before you sign in the dotted line. But most times people don't. And what happens is that they mismanage the facilities, misuse lines of credit, use it for the wrong purpose. And then when situations come up down the road that they didn't expect, like COVID is one of them.
Of course.
How does one respond to a situation like that? So you have the first part of the problem when it comes to debt is not understanding the role of debt and debt as a tool versus debt as a weapon. And then when you are in debt, how do you get out of debt in terms of debts that are still running on a current standing, in terms of the debts that are not in arrears or anything like that? And then how do you get out of debt when things have turned, sour, where you have a mountain of debt, you can't service them at all. What does one do in that situation as well? So that's like the spectrum of in terms of debt. So you have debt in terms of the entrance into debt, managing the debt whilst you're in debt, and then how do I get out of debt? Because at the end of the day, the best type of debt is no debt.
Of course.
So depending on what the problem is, there are different strategies that can be employed. And of course, I work with people on all those levels where, especially when they have problems, dealing with debt that they can't pay. How can they represent themselves in with the financial institutions? So that is definitely actually one of the most important parts of this business,
right,
in terms of guiding persons. So I'm glad that you raised the point. In terms of the times that we're in right now, if you don't have a job, you can't service your debt, and that's the reality of the situation. Financial institutions may have to write off the debt. They may have to pursue recovery measures. And if you're in that situation, there are different things that you can do. I mean, even to the point where you can even get the financial institution to forgive part of your debt. Now, that's also possible, but how you present your case, it's is essential for them to get to that point. I'm not saying to abscond from paying your debt, but if you absolutely can't, which is a worst case situation, what happens at that point in time?
Yeah, I suppose when you're in that situation, it could feel like there's no real. The best thing to do is hide, don't answer your phone at all.
Yes.
Try to change your number and thing, it could feel it's real stressful.
Actually, I tell people to flip the script, because if they're calling you, you flip the script. You start calling them. And I do it all the time with my clients who are in that situation, and they start calling the debt collectors or the financial institution once a week and telling them pretty much the same story from last week, but at least they know that they're hearing from you. And what that does, that takes the temperature down a bit. And the perspective, they know that you're trying. And even if you have to pay a small amount on a regular basis, a tiny amount on a regular basis, it shows that you have some goodwill, some good faith. and that it ameliorates the situation and the relationship between you and the financial institution. Even though some debt collectors, especially the hired ones, where we're talking about the contracted ones,
Sure.
they are the ones that they get paid when you pay. So they will press you, to squeeze blood out of stone, as a
Of
bailiff
course.
once told me. And if you're dealing with them, even when you're dealing with people like that, there is still an approach that you can use, and they really can't. Putting you in jail is only a pressure tactic. I haven't had in my entire journey, I've never seen one person go to jail because of a debt.
Really,
Believe it or
it
not.
feel like you're going to go to jail for real.
But they tell you that. They give you that information. They tell you that if you don't pay this, you could end up in jail.
Yeah. It's unlikely.
Well, it could happen, but it's very unlikely. I mean, there's so many things that have to happen before that occurs.
Right. But I like this strategy though, because from my experience with debt collection, and you'll tell me if it was similar with you. When I go to work in the morning, it's a list I print in. It basically shows me who is outstanding for how much time, what is the principal, what is the interest. And I just call in through a list. So while it might feel very, very personal for each individual on that list, I like this strategy a lot, because if I have a list, I am Nick Dean on that list, you calling me every week, to use my easiest customer.
Yes.
You know what I mean? If you could put it like that. So, all right, let me about it. I don't talk to Nick for the week. I know he will call next week, and I suppose as much as he feels to hide, it's probably the worst thing to do for your own stress level too.
Yes.
So you're from the standpoint of coaching, somebody who is already at that point could come to you and get help to reverse the situation.
No, actually, the coaching spans the entire spectrum. There's coaching that starts from when you get your first paycheck as a new person in the world of employment, to coaching to the point of just before retirement and even post retirement. So coaching can be employed throughout that entire journey of one's life.
Well, let me ask you a real random open question. And how come there's no more of a thing like at school age, boy? Because if you could figure some of these things out before you get your first paycheck or when you get your first paycheck,
yes,
life could be a little easier. No?
It could. All right. So let me address that then. There are two things. One, the old educational system, I say the old educational system because things are changing gradually. The old educational system did not include financial education. And part of that was, the reason for that is teachers didn't know it. I have a lot of teachers who are clients who don't know how to manage money. So how can they give you what they don't have?
Gotcha.
So that's the first problem there. The second problem is that they didn't build it into the curriculum and make it something examinable. So because having financial literacy doesn't get you a job, it's a life skill. So it's not an area of heavy focus. But I do know now schools are beginning to become more aware of it. I am actually part of a team of people working with the Central Bank of Trinidad and Tobago. We do a program called the National Financial Literacy Program. And I'm one of the facilitators. I've actually helped them to build the program in 2007. And we still run that program. So there's a great outreach in different communities, different sectors. And the schools tend to be also included in that as well. I know that they were thinking about getting more involved in schools. I can't say for certain how much headway they made into that area, but I know the financial literacy definitely is on the rise, and the more people that talk about it, I think even if it's not official in the school system, eventually the exposure from outside the school will penetrate, or it will find its way into that system. So I have hope. I'm very, very optimistic about the outlook of financial education.
Well, that's real good, and it brings me back to something you raised earlier, where, for instance, if the school isn't doing it and then you're dependent on the household to do it, I can see what you're saying now about understanding a little bit of the history of the individual and so on.
Yes.
Before providing the coaching, because if your parents always going to give you guidance, right? But they're giving you based on the best advice, the best that they have. They're giving you the tools that they have, what work for them, what kind, So it's not
correct.
It's not really professional advice at all. It's in a lot of cases,
Yeah, correct. I mean, parents could only really give you what they have. I mean, they can't give you what they didn't have.
Right.
So, but again, I'm saying that definitely is changing. The world is becoming more sophisticated thanks to social media. Just as social media and all the various forms of media ha- are causing people to spend more money, the good is also being promoted in on those platforms as well. And for instance, this program that you're running, your podcast as well, is one of those things that would help make the world a better place in terms of financial, education. So I commend you for including that in your menu of things.
Yeah, I appreciate that. And it really is because it's really me trying to face all the things I struggle with. So
Yes.
I mean, people like you coming forward to do it is so good, and it makes me think of my son more than anything else because he's 8. And
8 years old.
he's 8 now, yeah. So I could tell you the advice I'm giving him is bad, right? From now, based on my own experience. And
Right.
it's like this. I play a little bit of music, but I wouldn't
Right.
teach him music because I learn music. Parang man, I learn music by being around parang side, learn a chord or two here, and I learn as I went along.
Right.
No, because I want him to play and be able to read, understand, to hear much better than I am.
Yes.
I pay somebody every week to sit with him, and
Right.
he goes through chords and learn everything. I'll play along with him and I'll go, but I wouldn't take the role on as teaching him. So as early as that, and I would do the same with football or things like that. So many have a coach and so on. So I think developing programs in your field, I don't know what it would look like, but if there are things, I wonder how many parents would be out there willing to do something like that brings them or put them in the mindset of how money is to be managed, or or changing the attitude towards money. Just getting an outsider to look at it. Is merit in that, you think? Like at that age?
Yes, it is actually. We do. Actually, my junior partner, she did something recently with teenagers and under 15,
Right.
a group of children under 15. But in the past, I've worked with children as well. But in terms of a formal course that we've set up, we actually have not yet set up that because we're still dealing with the adult needs.
I'm sure.
What I would say on that point is that a lot of people think that if I teach my children or hire someone to teach my children about financial education or financial stuff, and they could avert the problem when they become adults or avoid the problem when they become adults. But here's the main thing, right? There is something that is going to stymie that. Children follow what they see parents do rather than what they hear them.
I suppose, yeah. You have to make the change yourself.
You have to demonstrate it. So you have to be in that role where you exhibit the things that you want them to adopt, because then they would go now to do the courses. They would go and do their classes or a camp or something like that. And then when they come home and they match that against what they're seeing happening in the household, there's going to be a kind of a dissonance. There's going to be some kind of conflict there. And then the parents are going to say, well, don't do it. And once parents start saying, don't do as I do, but do as I say,
yeah, in trouble.
You're not going to get the buy-in. And this is where the system may fail. So I think the first thing parents have to do is they have to first educate themselves.
Right.
It has to be a multi-pronged program as well. It can't just be one directional. So I would not say children should not go and learn about financial education. I think it has to be supported on both sides.
Right.
Of the story, the coin, I should say, where parents and children are learning it at simultaneously, and that I think will definitely have the positive outcome that we all want.
Makes sense. Yeah. Makes sense. Well, if that's the case, then as a parent, let me tell you about some of my own, because every time I talk to you, I hear more about myself than you would imagine.
Good.
The first time we spoke, you spoke about credit card debt in particular.
Yes.
And my experience was that in UE, there's a bank that gave a student credit card.
Yes.
And there was nothing else to do but get your parent to sign this thing.
Yes.
And it might have been $1,500. It's to cover I guess it's your books and your expenses for the semester.
Right.
And as soon as I get that credit card, I went straight to B-Mobile and buy a phone for $1,500. The exact limit on that card.
Wow.
I mean, it was so bad that the card had some kind of like $35 charge for the card. So I tried for $1,500 to get declined. I had to find $35 now to put with it to buy the phone.
Wow.
And I still have that credit card up to today. And I don't think it was ever at a point where it was cleared off, well maintained.
Yes.
And I mean, the what is called it? The credit limit is much higher now.
Well, of course,
Yeah,
because
they did.
you're good paying clients.
Yeah, they like that. So I guess they're looking at me as like good to go, paying
You're good
interest right through.
business. Yeah, actually, Visa did. I think Visa did some studies whereby they did studies with students getting credit cards, and when they hold them many years later, when they had their own families and stuff like that, and they realized that children who had a credit card from a certain credit card company, let's say you have Visa, you have Mastercard, you have these different ones, so not necessarily a bank per se, but let's just say Visa. So if you got a Visa credit card versus a Mastercard credit card when you were in university, you will more than likely have a degree of loyalty towards that brand for the rest of your life. So when they looked at that, they started promoting more aggressively credit cards to university students, and that's why a lot of people are in a lot of debt today, because a credit card was one of the first things that they ever got in their entire life, in terms of financial instruments. So yeah, I mean. That's the other challenge here. So okay, so you're talking about the limit gets to increase, obviously, because if you're paying the minimum payment every month, which means they're not paying off the balance every month, then the bank who is really lending the money. So you have different entities here. You have Visa International, for instance, or Mastercard International, where they give the sort of the gateway to access the funds that the bank is lending you. So the banks are working in conjunction with the Visa Corporation, let's say, where Visa gives them the stamp of approval for the international access, and the banks are providing the capital so that people can borrow. So the banks now, where they are lending the money, you are now owing the money to the bank. Visa International they're getting their annual fees, and they're also getting a percentage of every transaction. So they're making tons of money. And once you continue to use your card, the bank is making money. Even if you clear off your entire balance every month and pay no interest, the bank is still making money. Visa International is still making money. Mastercard is still making money. And if you don't clear it off, then there's another layer of revenue that the financial institution will get, obviously, because now you're owing money.
Right.
And interest on your credit card is usually the highest. So you now, when you get to that place where your credit card limit or balance is in excess of your paycheck, there's no way that you could clear it off. No short-term way that you could clear that balance off in full. So most people end up just paying the minimum installment. And once you do that for a number of years, the financial institution would look at your profile and say, wow, this guy's a real good payer. Maybe we should increase the limit. And that's what people do. They get the higher limit and they continue to manage the debt in the same way by paying the minimum installments. And every so often, they will continue to increase the limit to a point where it gets to a fantastic level that you have absolutely no idea how you can get out of it.
Yes.
So what you're talking about there is that's all scientifically proven. That's part of the plan.
No, Eliana, it's so much a part of the plan that you say that the study showed that you're more loyal to the institution, and it's a fact when it comes to me, because I do most of my banking with them over the years. The business now is bank with them, I guess. So
that's how it goes.
It work out. It's a small investment. But I never knew that. I always felt like for credit cards I have, and I just pay the minimum amount. I always had myself down as a bad customer in the eyes of the bank. But I see what you're saying is a very profitable customer, I suppose.
You are what the bank calls good risk. Now, lenders first assess the risk of their clients. So what they want is to make sure that there's no risk. No risk is you could show that you're no risk because you're servicing the debt and they're collecting their interest every month. So they know that you're not going to default on any payment. So that's when they say, okay, this person represents no risk. Let's throw a lot more debt at them at the highest possible interest. So imagine this in the world of investing, right? When you are an investor as an individual, you are told that if you want a higher rate of return, you have to take on more risk. Now, here's the real interesting part of it. When the bank is treating you as the investment, they want no risk and they want the highest possible return. So as an investor, they tell you, well, you can't get a higher return unless you take a higher risk, and the risk means that you could lose your money. Right. But on the flip side, when they're doing it, they want absolutely no risk with the highest possible returns.
I suppose. If the bank is making the assessment of trying to figure out if somebody, because when you're now getting a customer, you had to make some assumption about what level of risk you're taking.
Yes.
But I suppose if you have a small debt and they see you servicing it, like just paying the minimum, they kind of realize they have somebody who is little risk and high return kind of thing.
Yes. Actually, the credit process, there are what we call 5 to 7 C's of credit, and your credit history is one aspect of it. Right. When they are assessing you in terms of the risk profile of a person, there are different things that they will look at in coming up with, how do they measure the risk of this person? Do we want to accept this person as a client to borrow from us? So they'll do look at all those various things. And credit history, or how your pattern of payments go, definitely is one of the strongest indicators of if you will be a good risk to the financial institution.
So, will that helping me answer a question? So, for instance, when you get to the point of a mortgage, because one of the things that I don't know if it's wise or not in the way I look at it, right? If I take a loan, like a mortgage or a car loan or something, there's no chance of me not paying that or not paying it on time. If something happened and they had to call me, it's a couple of days and I will pay it, right?
Right.
But I've always had a poor attitude or less control when it comes to things like credit cards or lines of credit and so on. Largely because there's no direct monthly pressure and a date by which it had to be paid in my mind. You know, I know a car loan, I had to pay that on the first every month. So in terms of income, I'm structuring it around, okay, I have to pay this mortgage, I have to pay the car loan and so on. Right. But what you're saying is I providing even more proof for them that because if you're very limited risk, I would assume, based on what you're saying, if I pay no mortgage on time and so on, then give him more line of credit, give him more credit card and thing.
They will.
Yeah.
They will. The point you raised is a really interesting point in that you treat your car loan and your mortgage more seriously because you know that there's a consequence if you don't pay.
I suppose.
So there's this big stick hanging over your head. If you don't pay, they will take back the car or they'll take back the house.
Yeah,
they'll repossess it. So that's the purpose of holding those things as a backup or a collateral or security for those facilities.
Right.
Whereas the credit card is what we call an unsecured facility. So people tend to be more liberal with how they manage credit cards. They miss a payment now and then. Obviously, a late charge will happen. They go over the limit. So credit cards do encourage people to be less fiscally responsible with their finances, as compared to a car loan or a mortgage for your home. And that's a really interesting point. I mean, that I didn't think about it from that standpoint. Now that you voiced it from that standpoint. So your treatment of your credit card, because of the flexible nature of a credit card, people think that they could pay it anytime, but there is consequence if you don't pay it on the due date.
The late fees and so on are consequences if you miss the payment for a credit card.
That is part of all of the facilities. If you miss a payment, they will have a late fee, but it does more damage to you than immediate financial damage, because it does affect your credit history, your credit score.
Right.
When you miss payments, especially on your credit card, that could affect your ability to borrow for other things down the road when it's absolutely necessary. So, making payments on time is essential to preserving, your credit record.
Right. Well, what started happening to me as the years passed by as well, because when think of the credit card being $1,500, the late fee, it seems inconsequential. If I could put it like that, it's very, very small amounts in the greater scheme of things. But as the limits start to get higher and higher, and as you say, I mean, I never even thought of that. You said, when the balance started to get more than your salary, well, now I'm self-frightened. But when I start seeing what the minimum payment was like, because with two of the banks I have credit cards with, they
Right.
automatically take from your account. Like they
Right.
hold an amount if you pass the date or whatsoever it is.
Right.
But I started to realize I had to do something about this when I start seeing the amount. It's like, what? I thought this credit card thing's supposed to be a couple $100. All of a sudden now it's a couple $1,000. And it
Yeah.
affecting your ability to do other things that you have to do. So
Yeah.
you get deeper into that cycle of even the late fees and so on is high.
Well, it makes it more difficult to get out of debt when you're operating at that level, because what's happening, understand this, right? If they have your money, you don't have it. So
Right.
if you're paying money and late fees or extra interest, that means you don't have money that you could have retained for savings that you can do stuff on your own. So not managing debt properly actually weakens you financially, and that makes it predisposes you to further debt down the road, because you do not have your own resources to take care of your needs. And that's a cycle of borrowing, that will ensue to a point where it might get to a point where it reaches where you no longer could borrow because you have now maxed out your ability to borrow all around.
Right.
And it may not have occurred as yet, but generally every time you go back to a financial institution, they're going to be looking at that management of how did you manage, your facility. And again, if you don't have savings, it means that you part of the money that you could have had as savings is now going in interest and late fees. And it might seem inconsequential, but understand this point. Wealth is neither created nor destroyed in large amounts. It's usually created or destroyed in small amounts. And if you get poor in small amounts and you stay poor in small amounts, you get rich in small amounts and you stay rich in small amounts. So if you talk to a few very wealthy people, a lot of wealthy people are very, very stingy people. They're very, very cheap.
Yeah, that's for sure.
But that is the negative stigma that we apply to them. But the truth is, they respect the fundamental building block of wealth, which is $1 or even less than $1.
Gotcha.
And once they understand and appreciate the power of $1, they do not mishandle it. And that's the mindset that they have. It's not that they're cheap; they just understand how powerful $1 is. Accumulated over a period of time, it could make a huge difference in your financial future. So wealthy people understand that, whereas on the flip side, people who are not wealthy and people who are extremely poor, they do not appreciate that, and they part with $1 very easily.
Yeah, tell you a little more about myself every time you're talking, because it just seemed like a little bit of money. So it's like, yeah, this is nothing, but I hear you loud and clear.
It adds up.
Of course.
Over time.
All right, so you said that for because if you leave me and talking about debt, we're going to talk about this for a whole 2 hours, because this is it's something that I have to. I know you had spoken, and maybe before we wrap up, you could talk a little bit about that, like your services, how you access them, and so on. But you have a new client in 2021. I can tell you that up front.
That's wonderful. I welcome you with open arms.
Good. I don't know if it's the most troublesome client you ever had, but I'll go for it.
I doubt very much. I mean, it sounds like you have a good attitude towards change. I mean, we just have to make sure that your desire for something better is greater than the desire for the things that you want in the present. You have to love your future self equally, or maybe sometimes even more than your present self. And once you do that, then you start making the right decisions. And the first one, of course, is to seek counsel. And that's kind of like what you're doing now. You're talking to someone who has some experience, and that new information is coming to you. It will stay with you to the point where it might have an effect. In terms of the programs that we do, as I said before, our business is split into two key areas. One is financial education, and the other one is consultant coaching. And the financial education is the area that we want to push more, because we can reach more people to get them in that net, if you want to call it a net, where they can now start doing stuff for themselves. And when they have reached the maximum threshold of their knowledge, then they can talk to a financial advisor. So you become a more informed client. You become a better client. You we don't have to educate you in the consulting engagement. And in that engagement is where we start dealing with problems that are very complex and so on. So from the educational standpoint, we have two programs, and one is what we call the 7 Steps to Financial Mastery.
Right.
And that is a program that is built on my 30 years of knowledge in the industry and the do's and the don'ts of how to navigate the choppy waters of financial education and financial management. So that's 7 steps to financial mastery, and it starts with financial freedom. It goes into risk management and insurance. It goes into budgeting. It goes into debt management. It goes into investment. Then we talk about property ownership, the A to Z on property ownership. Then we talk about, how do you pull all that together in terms of developing your own financial blueprint. So there are 7 key pillars that, as it were, with respect to every person's financial life. And we drill down in each one of those.
So what are those 7 steps? That 7 things that you could share in terms of?
Yes, yeah. So actually, in terms of education, we do have two programs. One is the longer program, which is the 7 Steps to Financial Mastery. And the first module of that is financial freedom and retirement plans.
Okay.
The second one is managing risk and insurance, in terms of everything you need to know about insurance. Right. And the third one is managing credit and debt elimination. So how do you borrow, and then how do you treat with debt when you're in debt? The one that follows after that, number 4, is budgeting and cash flow management. Everything you need to know about budgeting and cash flow management. We talk about the apps that people use, the science behind budgeting, the psychology of budgeting. Is very, very comprehensive and very, very beneficial. And that's like the engine, I would say, in terms of, getting things right. After that, once we have cleared that 4th module, we then start taking you into the realm of investing. Right. So we go into investment instruments and strategies. And then one of our favorite investments is real estate. So we, rather than just tell you go buy real estate, we tell you exactly what you need to do from the time you decide that you want to buy a property, whether it's to living or to live in or to invest. From getting from the idea to the actual keys, if it's a building. We call it the 5 P's of property ownership, where you talk about the paperwork, the people involved, all of the payments, the processes, and the various properties that you could consider to acquire. And then the last module, which is module number 7, we call that the customized financial blueprint, which is the actual documenting of all of your financial aspects of your financial life into a format that helps you make better decisions for the future. We offer that also, that module 7, as a service, as a product on its own, because we do financial blueprints for clients. It's also called our financial plan. So those are the 7 key modules. And then we have a shorter program, which is a 4-week crash course, which extracts like some of the highlights from this longer program. So sometimes people may not want to make the heavy commitment to a longer program, because it takes 2 weeks to do one module in the 7-step program. So you're looking at about 14 weeks to cover that program. Whereas we have a crash course recently launched. We launched that last month, where you can cover the key highlights in terms of all of these 7 steps in just 4 weeks, 1 hour. 4 weeks, it's all virtual.
The 1 hour a week for 4 weeks?
Say again?
1 hour a week for 4 weeks?
1 hour each week for 4 weeks.
Okay, gotcha.
So in 4 weeks, you would have covered the entire crash course. And it's really enjoyable. People have had a lot of fun. They learned a lot. And then some people will matriculate into the longer program, because in the major program, we have each topic is now dealt with in more time. We take more time to go through the topic, whereas we would have highlighted it in the crash course. And sometimes people just need a crash course to get them going, and then some people want to go a little deeper. So we have that aspect of it. And then we build a lot of other programs as well. One of the things that we have coming up in 2021 is we're going to do an investment series where we're going to focus on each individual investment instrument and talk only about that.
Right.
Give people strategies, let them understand the mechanics of it and how they can incorporate that in their entire portfolio. So that's an investment series that's going to be coming this year. We'll be building it out module by module for that. So that's the entire educational program as it stands right now. And then, as I said before, the consultant element is where we do individual consultations, where you come as an individual, give us an idea of what your situation is, and then we customize solutions for you, where we look at your particular problems and then I design solutions to help you get out of problems and to help you achieve the goals that you want to achieve for yourself.
Oh.
And that's pretty much it in a nutshell. We could talk about cost when people reach out to us, then we could talk about the cost of these things. Because the cost does change from time to time. These things we've had an introductory price, and that price is gradually changing every time we run a cycle of this program.
Makes sense. But the more you talk, is the more questions I end up having. So when you start with, I've found that in talking to whether it's insurance agents or financial advisors, it usually starts around building for retirement. How come why is retirement discussed so early in the process?
Because of the huge money involved, most people only start thinking about retirement when they're in their 50s.
Right.
And that's when they get serious, but they get serious because they're scared now.
Time running out.
Right, time is running out, and you haven't taken advantage of the power of what we call compound interest. But once you begin with the end in mind, so financial freedom or retirement is the end game. Gotcha. If you can do that at an early age, you have people who are getting retired in their 30s, you have people getting retired in their 40s. We call that financial freedom. We just use a different word meaning the same thing. It means that you no longer work, you no longer have to work. You have enough money coming in from your various investments that can fund your lifestyle. So that's the end game for every single person.
Right.
You don't want to work for the rest of your life.
Of course.
But you cannot stumble over that. That has to be a deliberate, orchestrated strategy.
Right.
And why we start with it is we show people, okay, these are the targets that you need to work on. And every single thing that you do today, from your decisions on a daily basis of should I buy a bottle of water today or not, will have a bearing on your financial freedom goal or your retirement goal. Believe it or not, it does. So that's what why we start with it. We want to get people more conscious about the size of these targets and just at a minimum level.
Right.
And once they get more conscious of that, every other aspect of their financial life, they tend to treat with it a little more, responsibly and a little more seriously.
Understood. I always found it to be an odd thing because it seems, and what you said is just my thinking too. I would have probably started at 50 because I always feel like retirements are young. You'll see about that when that time comes. Let me see about now,
Yeah, the difference that you would find with us and the traditional so-called financial advisors who are really insurance agents, we do not, they would recommend annuities or pension plans, and we do not.
Oh my God, I'm in more trouble now. I thought I had one thing going good.
I have found, which is one of the reasons I left the insurance industry when I realized how flawed it is.
Right.
I could not sell it anymore, and I had to tell people the truth about it. So,
oh God, I was looking forward to our first meeting, but I ain't feel looking forward to it again.
So that's the essential difference between ourselves and the insurance industry or even the banks. We do not recommend annuities or pension plans as your first option. It might be a secondary or tertiary option, but it's not the first option for retirement. You're gonna be really, really, how should I say? You're gonna be really disappointed when you're ready to retire with those things.
Well, you see, this is, again, talking to professionals a hell of a thing, because I would not have thought, when you say retirement, I hear in pension and annuity, I hear in pension and annuity. So I thinking, when you say that, I said, all right, well, I could call Nick and start at stage 2. I have stage 1 covered. But clearly not.
No. And let me tell you something, Corey. One of the things that, why we also put retirement and insurance and risk management early in the course is that the money that people waste in those two those two
God.
areas,
Mm-hmm.
they can actually the money that they fritter away in terms of the insurance agent commissions, they can
Right.
retain that money, and then they can now start accumulating real wealth, not transfer wealth to someone else.
Mm.
So the first three modules show people how not to waste money in the wrong things with poor decisions, which is the areas, the industries that actually make the most money from the public. The insurance industry and the banking sector, the two aspects of the financial services sector that makes the most money. And once they're making money, people are losing money at the end of it. And that's the unfortunate
I
truth of
suppose.
that.
I suppose. Well, who knew? I didn't even know that I had anything you could do other than that for retirement. I thought when you say retirement, you
Yeah,
find
that's a small part of retirement. Very tiny part,
really
if at all.
wow. Yeah, and I like that you cover as well the insurance part of it because I mean life happens.
Yeah.
And I mean, you're going to get blindsided a couple of times in life by things you ain't planned for. That's just
Yeah.
that's just the way it goes. So the insurance is a good
Well,
one.
insurance has had a bad reputation because of what the industry does. Yeah? They sell things that the public doesn't necessarily need. And once you understand how to purchase insurance, you will not waste a lot of money. The biggest mistake people make is purchasing the wrong types of insurance, which is the insurance policies that the industry recommends the agent to sell
Right.
because it produces the highest level of income for the
Yeah, it's
companies.
high yield for them.
So so the commission structures on the undesirable policies are highest, and the ones that the client really should purchase are not the ones that they push, because those are the cheaper ones, the ones that don't cost a lot of money, the ones that they could actually save a truckload of money over the long haul. So once we really solve things like insurance, making the right insurance decisions,
Mm-hmm.
and show you how to shop around rather than have a loyalty to an agent or a certain company. Once you move away from those kinds of loyalties and you start operating as a sophisticated buyer, you tend to make better decisions that would not siphon wealth into somebody else's pocket.
Gotcha. And you would go as far as to making product recommendations from different companies?
And what we do, we try not to recommend certain products, but it's kind of like hard not to talk about certain products that work well and the ones that do not work well.
Understood.
We do that really for the protection of our clients, because we want them to know which ones are really horrible in the industry.
Mm-hmm.
And we kind of give them a guide as to, okay, this is the general class of insurance that you need for this need. And what we do, we help them make that decision. So they would go out into the industry, get quotations from different companies, and then we help them make that decision.
You help them, you look it over.
Because they're paying us a fee, so they don't need to be paying a commission to an agent.
Right.
Yeah.
Okay. Understood. So you're doing that 22-page document reading to see if it's making sense or not?
Pardon me?
When we get the quotes, you reading the 22 pages to see if
and I've seen it so many times I could actually tell you. I mean, they could just tell me the name of the product and I could actually know what
you
it is.
You in it.
I seen actually before you called,
Mm-hmm.
I was actually reviewing another client's insurance portfolio to tell her what to keep and what to get rid of.
Well, listen, if you wasn't sure you had a client before, no, I'm sure, because you talking about this and are hearing things that you're going to tell me already coming down the line, because my journey with insurance was also, I found it to be my best bet for discipline.
Yeah.
Because it's similar to the car payments and thing. You see, once I have an annuity or something that I know I have to pay by a certain day every month, I get a letter if it's in paid. I guess it's like you said, the consequences. I didn't look at it that way, but that's probably what it is, because I know the policy will lapse or whatsoever it is. Yeah. So I have paid those things, and because I know that I'm disciplined enough to pay those things rather than just save in a normal routine way.
Yeah.
I quick to buy. Anybody come back? Well, let me don't say that on this podcast. So that might be a bad idea. Don't call me. But anybody come by me with a policy and this and that, I just pay it, because at least I know in my mind it feels like, okay,
you're doing something good.
I'm doing something good. That's right. I'm saving something. And I found it to be a little bit frustrating because I feel like I have too many of those insurance products.
More than likely you do, because if you have an agent coming to you once a year or once every couple of years, you're going to buy stuff that you don't necessarily need. I think fundamentally the problem that you're speaking of there, the root cause of the problem is really your motives need to shift. Your motive is a pain-driven motive,
right.
and people do things either to avoid a pain or to make a gain, and you haven't done it with a gain motivation, which means that only the consequences driving the decision.
That is
That cannot
absolutely
that
true.
can't be the that can't be the only motive you're operating in. What we do, we try to cultivate the positive motivations. The what can you gain from this thing? And once you start thinking like that, then forced saving instruments like a loan or a policy that you think you're saving money in will no longer be the solution, because those things are very, very costly and not very efficient for wealth creation. And you would find yourself working longer and harder in your life to achieve wealth than you could necessarily have done if you didn't.
Well, let me tell you how true that statement is. When you say lacking gain motivation,
Yeah.
I don't know what them policies is. I don't know what they're for. What's the benefit of them? I don't know what date they mature. I have no idea. So you're spot on when you say it's like the gain not even that important to me. It's really just to eliminate the pain. I had to understand the other day what was registered annuity versus unregistered. I had no idea what them things was.
Yeah, well, we teach you all that.
Okay, got you. And then of course, I'm very, very interested too in the what you have as a module. I've never heard anybody I spoke to who had a real estate module as part of it.
Which is why we created it.
Yeah, that's real powerful, because I always feel like we built a house maybe a couple of years ago. I think 2016 or something. And I always say, if I could go back in time, I probably wouldn't have lived in the first property I built or bought or anything like that, because the mortgage itself is feel like a stranglehold, especially this year. Nothing feel like a stranglehold and now mortgage this year. But I didn't want to do the exemption thing.
Yeah.
And I say, boy, let me just battle and figure out how it's paid and stuff. But it feels like there's no end. I mean, that's something else. So,
you know what's interesting, Corey? Real estate. Now, your home is real estate, right?
Yeah.
It's included in the definition of real estate. So whether it's the property that you live in, or a piece of land, or whether it's an apartment that you buy or build to rent out to get income, it is our most important and the most critical part of all our clients' portfolio. In that, without real estate, you are going to be hard pressed to create real wealth down the road. And but that being said, it being the most valuable instrument in your portfolio of assets, it is also the area that people could make the biggest mistakes.
Really?
Because of the price tag of property, if you make a poor decision with respect to that, the cost could be phenomenally high.
Yeah, the consequences, gotcha.
Which is why we want to educate people about property ownership from the A to the Z about it, because the banks only talk about the mortgage, the real estate agent only trying to get you to buy what they're offering, and who else has whatever other party has a different motivation or an agenda, pulling them all together in one package. I think most people do not understand the whole thing as one piece, as one cohesive unit or body of knowledge, and you learn by trial and error along the way. And I tell you something, the one reason I built that program is because when I bought my property, I got through on this by the skin of my teeth. I did not have someone to guide me, and I almost lost a truckload of money with not knowing what to do. And this is why I say God is really good. He helped me get through, but it's something that can be avoided. And once you avoid it, you can definitely be assured that a lot of wealth will stay with you than go into an attorney's pocket or somebody else's pocket.
Yeah, I really never pay attention to the fact that the bank is only talk about the mortgage. That is so true. They studying their slice of the deal. Really.
That's right. They don't care about you. You feel stupid enough to do it. That's how they look at it.
Of course.
If you are stupid enough to you're qualified for it, but if you're stupid enough to borrow the most money you could borrow and buy the biggest house you could buy, and they're gonna take you to the they're gonna definitely take you to the hilt with that. They will never tell you borrow less money.
Of course, well, based on what you say, it's really the lowest risk. I mean, they have a whole property they could take or sell that appreciating in value over time. So it's more high return, low risk again for them.
That's right.
All right, well, boy, Hannah, you have one. I can tell you that, and I think based on listeners, you probably have a lot more, because it's just one of those areas. Like I feel like the beginning of this year in particular,
Yes.
What better year than now? And I like that you opened up to say that you really hit rock bottom to start.
Yeah.
And I mean, this last year has been, if they're at a rock bottom, it's looking close to last year. I hope this year could only be looking upward. As you say, it should only be progress from here on. So, I mean, as much as you are building out your modules and so on, I want to open the invitation for, as you dive deep into any one of these areas,
Yes.
I would love for you to come on as often as you would like, or you have material to share. Just to share with listeners, I think as you said, the conversation is a good place to start. It's just raising the consciousness of it overall.
And Corey, I think I'd love that, because let me tell you something. Even in our courses, which are very, very dense with information, I still cannot give people the number of years of experience that I have in those courses. So we have a number of things. There's almost a limitless list of things that we can talk about on the subject of money. I learn stuff every single day about money. Imagine that.
Mm-hmm.
So yeah, definitely. I think we have something going here, and depending on the response of your listeners, they could probably solicit. They could submit, areas of interest that they might have, and then we could probably build conversations around those.
Yeah, that would be great. I'll invite anybody to do that. And I saw on your website there's a document I was going through that I found was real helpful. Payday document. And some questions somebody had asked. They have it as a download.
A newsletter.
That's right.
Oh, yeah.
The newsletter. It's something you publish from time to time on?
Well, actually, what we have done, we've modified what we have on the website.
Mm-hmm.
The website is financialcoachingcenter.com. And Financial Coaching Center spelled with CENTRE. So that's the name of the business.
Right.
What we have now is a weekly newsletter, and which kind of like extracts. It provides the same information, but it's shorter, it's quicker, is more
digestible.
It is more digestible. So every week we send out emails, an email to an audience of over 1,000 people right now, of tips to keep you plugged in, things that you may not have thought about, just to keep you a little more conscious about your money management. So people can actually subscribe to that. They can reach out to me via WhatsApp, and my number is 724-6425. That's 724-6425, which is the same as 724-NIC.
Right.
And then I could just WhatsApp them other details, whether it's the email address or Instagram or Facebook and so on.
Okay, great. And I will share, I'll run it by you first, because the one that you have here, something stood out to me on the one that's on your website for download now, and it's a free download for anybody who goes to the website.
Right. They can get that.
It says, it's an Ask Nick section. And the person was asking about not saving because of unexpected expenses, and you broke down expenses into not important, not urgent, not important but urgent, important and urgent, and important but not urgent. Listen, this make me, all my iPhone plans went out the door when I read this, because I say, if Nick could help me not to buy every new Apple product that come out, we onto something here. And when I saw this, I'm like, okay, it makes a lot of sense. Really, really digestible stuff. So I'll probably share it with my subscribers as well. Awesome. And just send out your info to everybody so that people reach out. I think is really, really helpful. And there's it's just me. Like when you talk about, getting the financial discipline, if I could call it that, it feels very buttoned up,
Yes.
And very straight-laced, and something that you don't want to do. But I think talking to you makes it seem like it feels like something that's insurmountable. Look like at least you could take a step in the right direction. So
it's fun. It's actually a lot of fun once you start achieving things. I would say one of the biggest things for us is that when clients send us the keys to their new home, they send a picture. All my clients who we work with to get them to purchase their own properties, they send pictures of the keys. And, that definitely, I would say that is definitely one of the things that we know that we're on the right track with that.
Yeah, I suppose it's really just helping people feel more liberated. So it's a good place to start the year. So I'll send it out, and as people send questions, we just jump back on and see how much people we could help. And if everybody who listens to this know I am an open book. So as I see progress and stuff, I'll talk about it and my own journey through the program as well. So I'm looking forward to that.
Awesome, Corey. Well, we really appreciate the opportunity to share the good stuff that we have to offer with your audience.
Yeah,
thanks so much, Corey.
The pleasure is all mine. Thanks a million, Nick.
All right. Have an awesome new year, 2021, to you and your listeners. God bless and everyone stay safe.
Same to you. Same to you and your family. We'll be in touch.
Thank you.
All right, bye-bye. Right, so there you have it. So we have a commitment on both sides. Nick is going to jump on the podcast from time to time, give us some info, some helpful pointers, as he likes to do. And I am officially on board Nick's 7 Steps to Financial Freedom plan. So I will give you updates as I go along. The first session is on the 13th of January. So I'll be there and I'll let you know how it's going. That first one is about retirement. I really thought I had retirement down patter. Everything else in some shambles, but I thought I had retirement down pat. So as I go through it, I'll come here, I'll share, and I'm very, very open and looking forward to your feedback on things that you might want Nick to discuss. Let's use the best of his experience. He's an open guy, easy to talk to as well, and willing to help. So let's see if we could get some of this advice right and go into 2021 with some positives. Talk to you guys next week.